Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 347 on October the 31st, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Canopy Growth Companies, the ProShares Trust 2 Ultra Bloomberg Natural Gas ETF, and the Ford Motor Company. And we discuss three new trades on Spirit Airlines, Warner Brothers Discovery, and SoFi Technologies. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, as a reminder, today's show will use the end-of-day price data from Thursday, October 31st. The Dow Jones Industrial Average has lost 350 points so far this week, closing on Thursday at 41,763 points. The S&P 500 index has lost 102 points, closing at 5,705 points through the close of business on Thursday. And I'm going to be tied up this weekend, so I wanted to go ahead and get the show out to you guys, even though I'm going to be using end-of-day pricing from Thursday, October 31st. So now it's time for the topic of the week. The topic of the week is trading afraid. Now, I chose this topic in honor of the fact that today is Halloween, happy Halloween, and the idea of costumes and being afraid is part of this day's heritage. Have you ever been afraid while trading? If the answer is not yes, you're far more confident than I am. Being afraid to trade can look like maybe not entering the trade when you know you should for fear of losing money. It can look like not holding onto the trade even though all of your indicators support the decision you made. It can also look like holding onto a trade that has gone against you too long because you're afraid of locking in that loss. In general, fear is not an emotion that supports good logical decisions. That means if you find yourself afraid to trade the market, chances are you're doomed to make an error that will put you and your account in jeopardy. So, how do you defeat that bad trade-inducing fear? First off, have a written plan. Your plan should tell you when to enter a trade and when not to trade at all. Your plan should have a high probability of success, meaning that you've seen this plan lead to a profit over and over again in the past. The other way to address fear is to trade a smaller size if possible. If your fear is based on the size of possible loss, find a way to incur less of a loss. In general, fear does not produce good decisions, so you don't want to trade scared. Remember, if you miss one trade, there'll be another trade tomorrow. Hopefully you can build faith in your plan until you have enough faith in your own abilities to overcome that fear. People always say the best way to address fear is to look at it in the eye. Face it eye to eye. Well, in horror films, that typically leads to an early death. You will not make it to see the end credits if you face your fear early on. The healthiest choice might be for you to run at first. That might mean that you don't execute the trade. You might use a paper trading method, or you might return to another product that you traded successfully to build your confidence. Now, at some point, you'll be strong enough to go face your fear. That fear might be the last thing standing between you and your dreams of being a successful trader. Until then, find the best way to manage that fear and come back when you're ready to take it on. All right, so that's it for the topic of the week. We're going to dive into the trade review of last week's trades. And I'm knowing full well that today was a bigger down movement in the day in the overall markets. And so we're using end-of-day data on Thursday. I have a sense, I'm betting that the market's going to finish a little bit better tomorrow. We'll see how that all goes. That would obviously affect the week-over-week performance of these trades. So we'll start off with a covered call on Canopy Growth Companies, symbol C as in Charlie, G as in golf, C as in Charlie. At the time, the stock was trading for $5.44 per share. I looked at buying stock and selling the November 5/2 call at 53 cents. That could give us a 12.68% return in 3 weeks. Well, shares of Canopy Growth Company fell 85 cents, closing at $4.59 per share on Thursday. The call option we sold lost 33 cents, leaving us with a net loss of 52 cents if we were to close the trade out immediately. Now, shares of CGC have fallen every day this week so far, leaving us with a net loss on the trade thus far. And you could roll the strike lower, but I don't think you'll collect enough premium to make it worthwhile. Remember, when covered call trades go against you, you can simply plan on holding onto the stock after expiration, let that option expire worthless, and then selling another call option against the stock in the next month. So you're getting a fresh set of premium that helps to offset the loss. So that's how I feel about this one right now. I'll keep a close watch on the stock over the next few weeks to see if we get a price increase that moves this trade from a loss to a profit. But if not, I would plan to let this option expire out of the money in 2 weeks and then look to sell a new call option against it, against that stock rather, at a later expiration date, like December, which blows my mind. We're only 2 weeks away from using the December expiration. But anyway, next up, we have the credit spread on the ProShares Trust 2 Ultra Bloomberg Natural Gas ETF. Symbol B as in Bravo, O as in Oscar, I as in India, L as in Lima. At the time, the stock was trading for $9.46 per share. I looked at selling the November 9 8.5 put spread at 20 cents. That could give us a maximum possible loss of 30 cents per spread. Well, shares of the BOIL ETF lost $1.99, closing at $7.47 per share on Thursday. The out-of-the-money put spread that we sold is now in the money, which means this trade is also losing so far. The values have pushed so far that closing the trade would likely mean taking a full loss. I always like to keep time in mind. With 2 weeks left until expiration, any number of things can happen on this trade with the underlying stock price. So given the prices I'm seeing in the market on the options, I would actually hold off and look to make an adjustment if prices of the underlying head higher. Let's see what the future holds before we make an adjustment on this trade. The quick and dirty is just, if this trade is already pricing out, so the maximum value on this credit spread is 50 cents. So if it's already pricing around 50 cents, meaning it's going to cost me 50 cents to buy it in and close the risk, that's the maximum loss. But there's still 2 weeks left. So don't take the maximum loss when there's 2 weeks left. Let that come in 2 weeks. Maybe, just maybe, you'll get a price rise over the next 2 weeks, and suddenly this trade comes back into being profitable as well. And then our final trade from last week was a debit spread on Ford Motor Company, symbol F as in Foxtrot. At the time, the stock was trading for $11.07 per share. I looked at buying the November 10/11 call spread for 31 cents. That could give us a maximum gain of 19 cents, or that's a 61.29% return in 3 weeks. Shares of Ford Motor Company have dropped 79 cents this week, closing on Thursday at $10.28 per share. The on-the-money call spread that we bought is now out of the money. As far as adjustments go, I can create a credit spread and sell an iron condor against the spread. I can roll the strikes lower. I can create a butterfly spread too. I can collect 16 cents by turning this into an out-of-the-money call credit spread. The put spreads aren't priced high enough to make it worth creating the iron condor just yet. And again, with only 2 weeks left before expiration, it would also just be a good thing to price out the various ways to adjust this trade and then find the one that is most profitable and has the highest likelihood of remaining profitable. But the biggest key is that there's still 2 weeks left. So I'm not going to make a trade that's going to lock in a loss or set myself up for failure, meaning my initial trade would increase in value if the stock market went up, stock market went down, so I lost money, and then I make a trade like an iron condor, and then if the market moves back up, you end up losing money when your original trade might have made money. So I like to let my trades breathe a little bit for that fact, that simple fact in general, because I've been doing this a long time and I've made plenty of adjustments that I just should have stepped back and just left things alone. So my preference, my bias is always to leave things alone unless it's very, very clear that they're not coming back. So that's it for the trade review from this past week. Again, I used end of day trading prices on Thursday, October 31st. All new trades today. We'll use the November 15th options expiration for monthly options in the month of November. And this is the last week that we will use November expiration because that expiration is only 2 weeks away. Having a shortened time frame makes these trades inherently a little more risky because you'll have less time to adjust them. So keep that in mind for any of you that like to track the trades with me. So let's dive in. We've got a covered call. Today I'm looking at Spirit Airlines, symbol S as in Sierra, A as in Alpha, V as in Victor, E as in Echo. The stock ended the week at $2.40. And when I say end of the week, I mean it closed on Thursday at $2.40 per share. I'm looking at buying stock and selling the November 2.5 call at 28 cents, hoping for a return of 15.83% in 2 weeks. Now you enter this trade by buying stock for $2.40 per share and selling the November 2.5 call at 28 cents. This trade makes the most money if stock prices finish above $2.50 per share. The break-even price on this trade is $2.12, and in real terms, the stock purchase will require $240, and you'll collect $28 just for selling the option. Next up, we have a credit spread on Warner Brothers Discovery, symbol W as in whiskey, B as in Bravo, D as in Delta. The stock ended the week at $8.13 per share. By ending the week, I mean it closed on Thursday at $8.13 per share. I'm looking at selling the November 8 7.5 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Now you enter this trade by selling the November 8 put at 42 cents and concurrently buying the November 7.5 put for 25 cents. This is a credit spread because we are selling the spread. This trade makes the most money if stock prices expire above $8 per share. The break-even price on this trade is $7.83 per share, and in real terms, you'll receive $17 per spread that you sell and have $33 at risk. Our final trade on the week is going to be a debit spread on SoFi Technologies, symbol S as in Sierra, O as in Oscar, F as in Foxtrot, I as in India. The stock closed on Thursday at $11.15 per share. I'm looking at buying the November 10.5 11 call spread for 33 cents. That could give us a maximum gain of 17 cents or a 51.52% return in 2 weeks. Now you enter this trade by buying the November 10.5 call for 97 cents and concurrently selling the November 11 call at 64 cents. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $11 per share. The break-even price on this trade is $10.83 per share. In real terms, you'll pay $33 to enter the spread, and your maximum gain is $17 per spread. So that's it for this week's show. Thank you guys so much. I'm going to be heading off to an event on a ranch down in South Central Texas, if you will. So I wanted to get the show out a day early just to make sure I was able to record it. Sometimes Wi-Fi is a little questionable when you're out in the country too. So getting this done so that you guys have a new show. Thank you so much for listening. If you have any questions, feel free to email me. Have a wonderful Halloween today. Have a great weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.